6:15, time now to say good morning to Mike Eppel for the latest in business news. And we're going to start with Disney. Some job cuts there. We've been hearing about job cuts, Mike, in the tech sector, and now we're hearing it at the House of Mouse.
Yeah, indeed. Good morning, Tammie. The recently unretired CEO, Bob Iger, who led Disney for years, retired. Bob Chapek came in. Things kind of went sideways over the course of the pandemic years for Chapek. Iger returns and immediately announces a big restructuring for the Walt Disney Company to the tune of 7,000 job cuts. That is 3% of the global workforce. Iger wants to save about $5.5 billion in costs. They're restructuring into 3 distinct units for Disney. One that will focus on video streaming. Another will be specifically related to ESPN and some of the TV content. And then the theme parks. Now, it was kind of interesting to see the earnings at Disney. They were solid. The theme parks have been busy. We've talked about the return to travel big time here in the past several months. Disney Plus has got some big costs, but subscriber numbers were up there as well. And overall, this company kind of poised for a turnaround, and we're seeing that in the share price pre-market here, Tammie. It's up by 6% and up by about 20. It'll make it close to a 30% gain since Bob Iger returned to lead Disney in November. Stock that last year was down 42%.
All right. The day has arrived, the day that I have been dreading. Netflix is now cracking down on that password sharing. Tell us about that.
Well, basically, depending on what tier of your mainline subscription, I mean, you can spend as little as $5.99 a month on Netflix if you want ads for one streaming service or one outlet, up to 4, I think it is, if you're spending over $20 a month. But Disney doesn't want you to basically share your passwords all over the place with your kids and your grandparents in various different locations. So if you want an additional line in a different location for your Netflix subscription, it's going to cost you an additional $7.99 per month. So I am going to be kind of interested to see how this look. The bottom line here is Netflix, which said they'd never do this. They've faced increased costs. You want all this content, you have to pay for it. And if you want the upper echelon of these productions, it's costing a lot more money. So they're basically cracking down on password sharing. It's going to be interesting to see if this dents any of their subscriber numbers, how many people will pay the additional fee. There are some travel, you can travel for like a week or two and use your account. They'll send you a specific code to do that. But yeah, getting kind of tough to share your password under different ISP addresses, web addresses, I guess.
All right. And lastly, quickly, because we're just out of time here, but Google lost a lot of money yesterday, and it's all because of an incorrect AI password or AI answer, let's say, to a question.
Yeah, story of the year in tech really has been about chat bots and artificial intelligence, the inroads that these tech companies are making in this. And Google had a demonstration yesterday for its Bard chatbot, and the thing came up with an incorrect answer to a question that was posed. Now, I think it was a space expert that actually realized that the answer was incorrect. Nevertheless, when you're debuting something that has got so much promise and potentially some big earnings potential for Google, and you're up against Microsoft, which has been making big inroads with ChatGPT and its Bing search engine, and that seems to be working well. Market didn't take kindly to this. Google stock yesterday dropped 8%, and for a company that's worth about $1.25 trillion, represents about $100 billion in market cap, going bye-bye in a single day.
Because of a single answer. All right.
Because of a single incorrect, maybe this artificial intelligence isn't so smart quite yet.
Not yet. Some work to do. All right, Mike, thank you so much for that. We'll chat with you in a bit.
Thank you.